Hey, morning, guys. How you going?
Good. How are you?
Very well.
Good.
How are you?
Look, welcome along today. Gav's on leave, so we've got two special guests, Zach and Dylan, joining us with some new ideas. Hopefully, how are you, boys?
Very good. Very good. How are you?
Very good, mate. Very good for a Friday. Well, it's been an interesting market this week. We had a little bit of a touch over 9,000, and then got a bit scared, didn't we?
Yeah, it doesn't really feel like it can hold over there. It feels like it's quite top heavy up at that level.
Yeah, definitely a very special level, I think, isn't it?
Couple of fails during the week, but the US still looks very, very strong, doesn't it?
It does. It does. You've got to feel there's a sell-off coming there somewhere, but they keep pushing ahead, and obviously some big moves in tech keep driving that Nasdaq up, and the Dow follows. So amazing times.
Certainly is.
Right, guys, let's get into this week's ideas. I think the first one we had was actually one that I'd been looking at. I think on the first slide there we've got I think a trade in Woolworths. Woolworths has been pretty disappointing since its updates and results back in August. It also had a bit of a problem with some ACCC issues and a payroll issue, which I believe they've sorted all those things out. But it's certainly seen the market hit the stock very hard. It's sort of come back around $5 from where it was trading. And looking at where analysts are valuing it, the target's around $30.30 a share. So I've looked at the idea of selling a put at $26 out to November. And obviously, if we sort of take that view of sort of around about $100,000 worth of exposure, we can do 4 contracts or 40 contracts, for 4,000 shares of exposure. We're going to pick up a pretty good premium there, around about 30 to 40 cents of premiums available. So pretty attractive trade. As you can see in the chart there, that is generally a sort of more bullish sort of theme from analysts. So hopefully Woolies will see a recovery. So that's my one I'm looking at for the week. I think you had the next one, didn't you, Dylan?
I think Zach might be up next. Let me have a look. I'm happy to go. Oh, no, it is, mate.
Get Woodside there.
So, yeah, I'm looking at selling some puts in Woodside. Woodside's copped a beating with the oil price down. It's down 13% year on year, kind of reflecting the oil price. Oil's trading at around $61.50 at the moment, which everything that kind of comes out of those big oil players, they tend to want it around the $70 mark. So you've got about a 13% upside in the oil price itself, which I would assume Woodside should track along. As we can see there, we've got the price target at $26.50 as well, which is 16% uplift in the stock. Much the same, I'd be looking at selling probably the $22.50 put, get around 35 to 40 cents for that. So if we did that 50 times, just over 100K of exposure and good little earn on the upside. If not, I'd be more than happy to buy the stock at these levels and ride it out from there. The dividend yield's quite good at these levels as well.
Yeah, it looks like a good idea. It really got hit hard, Woodside, when the Santos takeover bid got pulled, which was a strange situation.
Yeah, it doesn't really make much sense to me. They got hit when they were looking to do a merger with Santos, and then they got hit when Santos fell over at the last hurdle with the Abu Dhabi takeover. So it just seems like there's just not much love in the sector across the board where we need oil. So I don't really see where there's much downside coming into it. I'm pretty bullish on it.
Could be a good day to do it as well, Dill. With the ceasefire overnight, you probably expect Woodside to dip today. So be a good one to look at today for sure.
Absolutely.
Yeah, that would be a good entry point, boys. Definitely. Now, Zach, you had a different strategy this week. You might like to go into that for us.
Yeah, I think you two have got the best of the put ideas in the market. So I looked at something on the upside, and it's on the back of a broker update. So Goldman's came out yesterday, and they updated the whole banking sector, and they actually put a sell on NAB and a $38 target on it. So NAB's trading around that $44 level, so a fair bit of downside there. And conversely, they actually put a buy on ANZ with a 37.50 or so target on that. So we actually saw that flow through to the equity prices yesterday. NAB was down over 1% yesterday, and ANZ was actually up over 1% yesterday. So seeing that call make some moves already. But my idea was for shareholders in NAB selling a covered call around that $45 level. You're receiving around 50 cents worth of premium. So if we work on 3,000 shares, it's about 130K worth of stock. You're receiving about $1,500 worth of premium for that option.
Yeah, definitely a pretty attractive trade. When a broker like Goldman's that comes out with a comment like that, or sort of a reshuffling of its favourites within a sector, we do tend to see a lot of movement of money, don't we?
Yeah, definitely some overseas money flowing through yesterday. It's actually quite rare we see that straight away, because generally brokers, they do lag pricing a little bit. So it was really good to see that flow through straight in the market yesterday.
Yeah, and look, a firm the size of Goldman's, really does have a big reach internationally. So we could certainly see some international funds shuffle their banking moves, which, obviously, as you said, ANZ was up while NABs was down. So the market sort of followed that Goldman's call well there. So interesting day, guys. Should be an interesting day with the SPY down a bit. Looks like we will sort of come back maybe to that low 8,900 level, and we'll see how we test from there.
Beautiful.
Will do. Thanks, guys.
Righto, boys. Thanks for that. Talk to you next week.
Bye.
Easy.